There was a time 10 years ago when if you went to a cocktail party and you said you were affiliated with mining in any way whatsoever, there was an expectation that you would be making an apology in the old sense of the word, a defense, on why you were in the mining industry, and you were expected to give some kind of account, a justification even, on what would possess you to be in such an industry and how things change. 10 years later, here we are. The President of the United States, Joe Biden, is heading off to Angola October 13th to 15th after visiting Germany from October 10th to 12th. And pop quiz, why is he going to Angola? For regular listeners of the program, could it have anything to do with the libido corridor? And yes, you would be correct. So as listeners to the Natural Resources Beat, again, much maligned and ignored, even still, I have to say it's been in the last couple of weeks, I've been to a couple of, the equivalent of a cocktail party, so to speak, or you go to a, conference and then people are talking after the event, people in public policy and whatnot. And even still, in 2024, when I say I'm in mining, people are still expecting the apology and some kind of defense. And at this point, it feels like, guys, it feels like talking about techno in 1995 and the person has no idea what you're talking about. And you're saying, there's turntables and there's this great music called techno and there are synthesizers and drum machines. A lot of people go to these warehouse parties and they're getting very popular. That's what it feels like now. It's like, I don't have any big sense of needing to, apologize, so to speak, or defend myself. It's sort of like in 2024, if you're going out there and saying, we have to engage in green policies, and then you don't have any real idea of the fact that metals are going to be required. It's like talking to someone that's making fun of this turntable music in 1995 because they haven't heard of it. So it continues. So hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. We have a fantastic show for you. We have Jeffrey Christian of CPM Group who joins us as the conversation continues to evolve between Jeffrey Christian and myself. It's very enjoyable to learn what Jeffrey Christian has to say with each interview on the gold market primarily, but then I squeezed in a few other metals at the end: silver, nickel, and lithium. And interestingly, and we're going to see it today in the stories, people are starting to get kind of bullish on nickel, which I find almost hilarious because where were we in January? Everything's shutting down. So I questioned Jeffrey Christian on his contrarian nickel call at the end of the interview. So a very fun, interesting interview with Jeffrey Christian on this week's episode. So bring it back now to President Joe Biden visiting Angola on October 13th to 15th. Now, last week, you might remember, I discussed a story of Secretary of State Anthony Blinken on the sidelines of the UN, basically singing the praises of the libido corridor, right? And how that was one of their big focuses, if not the main focus, outside of the wars. A story we've been discussing here since, I think, January. I think you can go back in January, even perhaps before, when I was discussing reports out of the Africa report about this libido corridor. And here we are 8 months later, Joe Biden's going to celebrate and, ensure that the libido corridor is being built. And one other detail before we go to this Guardian article, don't forget how Xi Jinping witnessed in person the signing of the Chinese version of this railway that was going to be upgraded, the Tazara railway that goes between Zambia in Tanzania, right? So again, you're seeing these railways going from the Copper Belt to the eastern side of Africa, and of course the libido corridor, which goes to Angola on the western side of the African continent. So we have, arguably the two most powerful people in the world, Joe Biden and Xi Jinping. As I've been saying here, this is the focus of the highest corridors of power, and it stands to reason. And what is the reasoning? It is the beginning of the supply chain. And what is the supply chain? Is that not your economic infrastructure? Doesn't everything really, at the end of the day, doesn't your economy, at the end of the day, your economic prosperity, does it not rely on the supply chain? and securing of natural resources, which are at the beginning of the supply chain. So I think it's quite clear now it's not an accident. And again, if you go to a cocktail party and maybe you've felt similar, perhaps you have a new conviction, a new won confidence in your industry, a new even pride, as I was half jokingly describing it, talking about techno in 1995. It's the hip new thing. If you've never heard of it, well, maybe you should check the State Department. And again, finally here, before we look at these articles, Kamala Harris saying we need to stockpile. So what a 10 years, what a transformation we've had in the last 10 years. Now let's take a closer look at this visit that Biden is doing to Angola. This is Rachel Savage at The Guardian. Biden to visit Angola as global powers vie for African influence. U.S. and EU are supporting infrastructure projects in Angola, which has historically been closer to Russia and China. And the article begins, when Joe Biden travels to Angola on Sunday, it will be the first trip to an African country of his presidency and the first to the continent by a sitting U.S. president since Barack Obama visited Kenya and Ethiopia in 2015. It is a marker of how Africa's 54 countries are increasingly courted by global powers, drawn to the continent by geopolitical shifts and an abundance of minerals needed for electric cars and other battery-powered technologies. Biden will visit Angola from October 13th to 15th after 3 days in Germany, as his presidency draws to a close before the U.S. election on November 5th. When Biden hosted his Angolan counterpart João Lourenço at the White House in November 2023, he said Africa was, quote, critically important, end quote, adding, quote, no country more important than Angola, end quote. So that was President Joe Biden. And, I was on X, formerly known as Twitter, and people are still mocking, Angola, like, why is U.S. President Joe Biden going to Angola? With the underlying implication being, why would he go to such an insignificant country? And so it just goes to show the general public is still not really informed on the natural resources beat. Scrolling down a bit, the U.S. and EU's most high-profile play to secure supplies from Africa has been the Libido Corridor. This includes refurbishing a railway that runs for about 1,000 miles or 1,700 kilometers from Kolwezi in the Democratic Republic of Congo's Copper Belt to the Libido port, which is also due to be upgraded. There are plans to build a new line to Zambia and eventually to connect to infrastructure through Tanzania to the Indian Ocean. It is not clear if this involves partnering or competing with China, which pledged to upgrade the Tanzania-Zambia Tazara Railway that it financed in the 1970s. Very interesting. I mean, it seems unlikely. It is not clear if this involves partnering or competing with China, and we were just hearing about that with, I believe it was the president of Tanzania and Zambia, with Xi Jinping watching, signing basically an MOU on the Tazara Railway. We're going to build this in person at this conference that they had in Beijing a few weeks ago that we were commenting on at the time. Continuing on, we have another story, this time from the AFP, which came out last week, and this is via MSN.com, Angola, a key partner in U.S. ambitions for Africa. And we have a few other details here. Joe Biden's choice of Angola as his first trip to Africa as president underscores the influence of the oil-rich country as the focus of one of the biggest U.S. infrastructure projects on the continent in a counterpoint to China's investments. Biden's October 13th to 15th visit, which comes just months before his term ends, will center on a massive multinational project to rehabilitate a 1,300-kilometer railway that will connect mineral-rich inland countries with Angola's Atlantic seaboard of Libido. So one article says 1,700 kilometers. AFP says 1,300 kilometers. When you look on a map, it's kind of, I guess it's probably open to interpretation because it looks like it forks and then rejoins when it goes through the Democratic Republic of Congo. Now, there's also another detail here I want to zoom in on. At the end of Biden's presidency, and even the way we were hearing Secretary of State Anthony Blinken discuss it last week on the sidelines of the UN, as I discussed last episode, really singing how it's one of their biggest, if not their biggest project outside of any sort of war, it seems like this is their main focus. And it stands to reason that it would be, based on our earlier reasoning of, securing the beginning of an independent supply chain. So from my view here, from what I'm seeing, I think that Joe Biden as well as Anthony Blinken, see this as a legacy event, so to speak. This is something where they can say 20 years from now, we helped secure the beginning of the supply chain, which has more importance than almost any other economic deal that you might make. Because as we see with BYD, if you can't secure your own beginning to the supply chain and you're relying on your competition, you're out of business. I mean, that's what you're looking at there. That's what Volkswagen is looking at. That's what we've been talking about really since the beginning of the year, when we started getting CEOs panicking based on these incredibly cheap BYD cars that were coming out. And, GM even joining the party and one-upping BYD by putting a $7,000 car out to their credit. Of course, where is it built? In China. So it just goes to show it's not that BYD is so brilliant. It's because of the supply chain, a point we've made on an earlier podcast. Now, let's continue this article. The Libido Corridor will transport resources critical to the global economy, including copper and cobalt, from mines in the Democratic Republic of Congo and Zambia to the port for export. The project is a piece in the geopolitical battle between the United States and its allies in China, which owns mines in the DRC and Zambia, among an array of investments in the region. Biden called it, quote, the biggest U.S. rail investment in Africa ever, end quote, when he met Angolan President João Lourenço at the White House in December. So another visit. And we have a quote from Chatham House Africa Program Director Alex Vines, who said, quote, for Washington, Angola is an example of an African state that has become less ideological and that is actively diversifying its relations from being overly exposed to China and to a lesser extent Russia. Washington also sees Angola as an emerging middle power in Africa, end quote, he told AFP. And a couple of more details here that are worth noting. The Portuguese-speaking nation of 37 million people is Africa's second largest crude oil exporter, according to 2022 figures from the International Energy Agency, with the oil industry making up about 90% of its exports. The country was devastated by a 27-year civil war that started immediately on independence from Portugal in 1975, when the UNITA rebel movement challenged the ruling MPLA that is still in power today. The United States recognized the Angolan government in 1993, becoming an importer of its oil. Scrolling down a bit more, peace and security as well as strengthened democracy would also be discussed during Biden's visit, the White House said. Rights groups and opposition activists have accused Angola's authorities of growing repression, including with new laws that would restrict media and clamp down on protests. But the focus is the railway project, which Washington has said could even be extended across the continent to the Indian Ocean. Beijing, meanwhile, agreed at a China-Africa summit in September to rehabilitate a separate railway from inland mining countries to the Indian Ocean on the Tazara route from Zambia to Dar es Salaam in Tanzania. Celestina Abreu, a sociologist at Catholic University in Luanda, cautioned that the United States, quote, does not have friends, just interests, end quote. And now just a few more interesting details on Angola. This is News24.com. Why Joe Biden's one African trip will be to Angola and what it could mean. When Beijing hosted the Forum on China-Africa Cooperation earlier this month, nearly every African country sent its head of state. Angola, China's biggest debtor in Africa, was among the exceptions. President João Lourenço went to Dubai and Malaga in Spain instead, sending Foreign Affairs Minister Tet Antonio in what was considered a snub. Now America's President Joe Biden plans to honor his pledge to visit the African continent right at the end of his time in office by going to Angola. The choice suggests how serious the U.S. renewed ambitions in Angola are and how it rates Lourenço's move away from Russia despite a strong bond still in existence with Moscow. And we have a quote from Jose Gama, a researcher and political analyst on Angolan affairs, quote, Angola, which had been closely aligned with Russia, has shifted towards the U.S. since the start of the Russia-Ukraine war, despite Russia being its largest arms supplier and a key partner in training Angolan generals. The article continues, the U.S.-China rivalry is also playing out in Angola's mobile phone sector. American-owned Africell Mobile Company arrived in Angola in 2022. It also has operations in the DRC, the Gambia, and Sierra Leone. But its situation in Angola is tricky because it competes directly with Unitel, which has a partnership with Huawei. The U.S. imposed sanctions on Huawei in May 2019 due to the company's purported ties to the Chinese state and the security risk that implies. China has also been actively seeking to establish a naval base in Angola on the Atlantic coast, which would threaten U.S. national security. So when Biden says no country is more important than Angola on the African continent, it actually stands to reason. This is going to deliver you the beginning of the supply chain, potentially, a large chunk of it, or at least what Central Africa can contribute to that supply chain, which sounds like quite a bit. And it's also perhaps preventing a Chinese military base from being set up on the Atlantic coast of the continent of Africa. So if you go on X and Twitter, you'll see quotes like, this is at TV News Now, and it's quoting CNN reporter Edward Isaac de Vere. And he said, quote, Biden in the next couple of days is heading to Angola and Germany. It's not like a really pressing foreign trip. A lot of people in the Harris campaign wish that he would maybe go away for longer at this point, end quote. It just goes to show that the concerns of the government are so different from the concerns of the media. I think from the State Department's point of view, I think from the White House's point of view, indeed, this is a pressing trip. I think for Blinken and Biden, this is legacy. This is a legacy trip. This is, something that they're going to point to in 20 years and say, we helped do that. This was one of our great accomplishments. Now, final story relating to this trip is simultaneously, this came out October 5th from the U.S. Department of State, state.gov. Undersecretary Fernandez traveled to Portugal and Spain. And here is the press release. Undersecretary for Economic Growth, Energy, and Environment, Jose W. Fernandez, will travel to Portugal and Spain from October 6th to 9th to engage key partners across Europe on critical mineral supply chains and promote trade and economic opportunities with the United States. In Lisbon, Portugal, October 6th to 8th, Undersecretary Fernandez will meet with officials from the Ministry of Economy and Ministry of the Presidency, as well as representatives from the Portuguese and U.S. private sectors, including leading critical minerals, telecom, data center, and energy companies. He will reaffirm U.S. support for strengthening economic, critical minerals, and energy cooperation in Portugal and throughout Europe. So, why is Jose Fernandez, who has been really focused on this critical minerals supply chain, why is he going to Portugal? What it tells me is perhaps Portugal is going to be the way that the critical minerals leave from Libido. Where do they go? If you don't have a massive port yet, or you're still rebuilding your port, are you going to sail to New York or wherever else on the east coast of the USA? Perhaps. But maybe, to speculate out loud here, maybe the easier trip is along the coastline and you just go to Portugal. It's shorter. All of a sudden, Europe has the metals they need, and maybe in Portugal, you're in Europe. Maybe it's a lot easier. Maybe it's even cheaper and easier. You drop off some metal in Europe, and then you send the rest over to the U.S. from Europe. That would be my speculation here, because you don't often think of Portugal or Spain as being hotbeds of critical minerals. But they are, you could argue, key players, potentially, in establishing an independent supply chain. So, as the last line of this press release says, he will emphasize the importance of critical minerals to building reliable global supply chains and highlight quality and sustainable infrastructure through the Blue Dot Network. So, very interesting there. Now, final details here. Another State Department release from September 30th. Secretary Anthony Blinken and Norwegian Foreign Minister Espen Barth Eide at the signing of a Memorandum of Cooperation on High-Standard, Market-Oriented Trade of Critical Minerals. Again, front and center here. Another headline, this is Reuters. India, U.S. to cooperate on critical battery mineral supply chains. There is an MOU signed on October 3rd. Between Indian Trade Minister Piyush Goyal and U.S. Commerce Secretary Gina Raimondo, and the MOU is to cooperate on strengthening supply chains in the two countries for lithium, cobalt, and other critical minerals used in electric vehicles and clean energy applications. And finally, a story from a couple of weeks ago, Turkey joins Western Critical Minerals Club amid EU-China rivalry. So Turkey has also joined the Mineral Security Partnership. So it continues out here. A wonderful show ahead of you. More fascinating news stories coming up on what's happening in the Chinese economy, and a wonderful interview with CPM Group Managing Partner Jeffrey Christian on this week's episode. Thank you for joining me. Once again, if you want to find us online, you can find us at northernminer.com. You can find us on X at northernminer, and on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. And turning to the website, iron ore copper prices slump as China fails to deliver fresh stimulus. So I saw a headline this morning, the Chinese stock market after rocket launching is now, I saw it was down 6% this morning. So of course, Chinese property central to the metals discussion here, as many people have commented on. Here is the story. This is Bloomberg News via mining.com. Iron ore slumped from a 5-month high, and base metals fell as a much-anticipated briefing by China's top economic planner ended without new pledges to boost government spending. Officials from the National Development and Reform Commission offered little to investors who had been expecting aggressive stimulus measures to add to a battery of policy moves unleashed in late September to boost a struggling economy. Iron ore futures in Singapore fell as much as 4% after being up by a similar amount earlier in the session. The briefing was held as China reopened after a week-long public holiday, and investor disappointment was reflected across Chinese markets. And we have a quote from Hang Zhang, head of trading at Yonggang Resources, who said from Shanghai, quote, "There had been talk that the NDRC may announce trillions of yuan in stimulus, but it came out with nothing at all," end quote. And scrolling down, Zhang also said, quote, "The stimulus from China so far is not going to yield a significant turnaround for base metals. We need to see stimulus feed into a real pickup in consumption before we can see big price rallies," end quote. So disappointment from China. Interestingly, continuing on, aluminum market squeeze intensifies amid LME delays and rising costs. So this story keeps growing of a squeeze in the aluminum market. This is by a staff writer at mining.com. There are signs of a mounting squeeze in the aluminum market, with contracts for October delivery on the London Metal Exchange trading at a higher premium over November. Traders caught in a lengthy queue to withdraw aluminum from the LME system are under pressure because they need to roll over hedging positions as they wait, while warehouse owner Istim Metals has controversially raised a key administrative fee that makes it much more costly to re-register the lightweight metal if prices turn against them. The market has also been eyeing a large long position in October contracts held by Trafigura Group, the same trader that originally deposited the mountain of aluminum in Istim's warehouses. So, just an interesting story there on mining.com. Continuing on, Canada to hit Chinese steel and aluminum with tariffs on October 22nd. This is Bloomberg News via mining.com. Canada published a list of dozens of Chinese steel and aluminum products on which it will place a 25% tariff starting in 3 weeks. The tariffs, which were announced in August alongside a 100% levy on Chinese-made electric vehicles, bring Canada's trade policy closer to that of its closest allies and aims to shelter domestic producers from lower-cost products made in Asia's largest economy. And we have a quote from Finance Minister Chrystia Freeland, who said in a news release, quote, "We are moving in lockstep with key international partners to protect Canadian workers and businesses in our steel and aluminum sectors from China's intentional, state-directed policy of overcapacity and oversupply," end quote. The tariffs will apply to a long list of items including ingots, coils, wires, bars, and rods. Goods that are already in transit on October 22nd will be exempt. The government said it plans to review the measures within the next year, at which point they may be extended or, quote, supplemented by additional measures, end quote. Canada's surtax on electric vehicles takes effect Tuesday and includes certain hybrid passenger automobiles, trucks, buses, and delivery vans. So very interesting. And then 2 days later, on October 3rd, China files appeal to WTO on Canada's tariffs on EVs, metal products. This is Reuters via mining.com. China's Commerce Ministry said on Wednesday it has asked the World Trade Organization to rule on Canada's imposition of steep tariffs on Chinese electric vehicles as well as steel and aluminum products. You know, quick aside, I watched French President Emmanuel Macron at I think it was a Bloomberg summit that was here in Berlin. I saw it on YouTube. And interestingly, he was basically saying, I actually highly recommend you track down that interview. And he gave a little speech beforehand, and he was basically saying the WTO is dead. And what really killed it was the U.S., their Inflation Reduction Act, where they basically ignored the WTO rules. And then you have China's overcapacity, as they're calling it. And so he basically said Europe shouldn't follow the WTO anymore. I mean, quite interesting. And it makes you think of Juan Bisset last week, who is basically also saying, that this WTO idea, we saw it in Indonesia, right? With, you have to sell us your nickel that you're mining. We don't have to process it in Indonesia. And the Indonesian president was just kind of like, yeah, that's nice. So there is a sense that the WTO is under severe pressure here. Let's continue. Following the lead of the United States and the European Union, Canada began imposing on Tuesday a 100% levy on EVs shipped from China, having also announced in late August a 25% tariff on Chinese steel and aluminum products. And I think where these tariffs on metals are going to end up is green metal. That if your metal is not basically ratified as ESG friendly, you're going to pay a tariff on it. I suspect that's how this will come about. I do wonder, though, in a global market, how you continue to compete with cheaper non-green metal, right? I mean, if you're Brazil, unless you just force all your trading partners to come along for the ride and also sign up to this. So finally here, China's Commerce Ministry said in a statement, quote, China has raised a litigation to the WTO over Canada's unilateral and trade protectionist measures and will conduct anti-discriminatory probe into these restrictive measures, end quote. The ministry repeated its strong opposition to the tariffs, which it says will, quote, disrupt and distort global industrial and supply chain, end quote. And continuing on, nickel price extends gains as metal traders await China's return. This is Bloomberg News via mining.com on October 7th. So nickel, again, it just goes to show how sentiment is one of the best indicators of whether to buy or sell, not financial advice. Nickel extended gains as supply cuts came into focus, while other metals held steady ahead of the reopening of Chinese markets after a week-long holiday. The metal used in stainless steel and batteries rose as much as 1.3%, on the London Metal Exchange, building on last week's 5.9% rally as China's stimulus program jolted investors who have been bearish on nickel's prospects. So we will hear from Jeffrey Christian in our future interview about his views on nickel. Very interesting. And also in metal prices, we'll see it's back above $8 a pound. So interesting times continue in the nickel market. And here just a headline. This is Reuters via mining.com. Hedge fund Elliott loses appeal against dismissal of LME nickel lawsuit. And just a line here, hedge fund Elliott Associates on Monday lost an appeal against the dismissal of its lawsuit against the LME over billions of dollars of canceled nickel trade, which judges said were vital for the stability of the overall market. And scrolling down a bit, Judge Stephen Males ruled that the extreme price movement on March 8, 2022 was, quote, a once-in-a-generation event, end quote, and that the LME acted lawfully in canceling the trades. Quote, there was no question of seeking to favor one cohort of traders over another. Rather, the decision was taken in the interest of the market as a whole, end quote, he said in his written unanimous ruling from a 3-judge panel. Quote, to have allowed the 8th of March trades to stand would have meant a real risk of what has been graphically described as a death spiral in the international metals market, end quote. Quite interesting. Another huge story, Rio Tinto to join top 3 lithium miners with Arcadium acquisition. This is Cecilia Jamasmi at mining.com. Rio Tinto has made an approach for Arcadium Lithium, the two sides confirmed on Monday, following market speculation over the weekend and as the sector begins turning its attention back to growth. The move would position Rio Tinto as one of the world's largest lithium miners behind only US-based Albemarle and Chile's SQM. This would happen because the acquisition would hand Rio lithium mines in Argentina and Australia, as well as processing facilities in the US, China, Japan, and the UK. Its customer base would include major names such as Tesla, BMW, and General Motors. And Rio Tinto said in a statement, quote, the approach is non-binding and there is no certainty that any transaction will be agreed to or will proceed, end quote. Both companies said they would not comment further. So very interesting. I mean, I remember Jakob Stausholm saying there was no rush to get into lithium, but that was before lithium cratered. So maybe Stausholm thought there's not going to be much of a better time. And there is a sense of a bottoming in the lithium market, but, you can listen to what Jeffrey Christian has to say. He's not so bullish on lithium. So let's continue. Kerr Mining to buy Silvercrest in $1.7 billion deal, also by Cecilia Jamasmy at mining.com. Kerr Mining has reached an agreement to acquire Canadian precious metals producer Silvercrest in an all-share deal valued at $1.7 billion. The addition of Silvercrest's Las Chipas mine in Mexico, one of the world's lowest cost, highest grade silver operations, is expected to make Kerr a leading global silver miner with 21 million ounces of the metal and 432,000 ounces of gold a year. The merged company will own 5 mines in North America, with 3 of them considered top silver producers: Rochester in Nevada, Palmarejo in Mexico's Chihuahua, and Las Chipas in Sonora, also Mexico. Some more M&A. Continuing on, Teck Options Cantera project in Ring of Fire. This by a staff writer at mining.com. Teck Resources is jumping into action in Ontario's Ring of Fire. Canada's biggest diversified miner has entered into an option agreement with Cantera Minerals to acquire 100% of Cantera's property in the region. Teck will pay a total of $275,000 Canadian cash over the next 2 years. This is like nothing. And Cantera will retain a 1.5% net smelter royalty. Maybe that is the real deal here. The NSR, or net smelter royalty, can be reduced to 0.5% upon the exercise of a buyback right by Teck for a further $2 million Canadian to Cantera. Well, that sure seems like a wonderful deal for the people at Teck. Seems incredibly low, but who knows how hard that project is to get underway. Continuing on, Canada reviewing Paladin's fission uranium takeover on national security grounds. This is also by Cecilia Jamasmy at mining.com. Paladin Energy's proposed takeover of Canadian explorer fission uranium has hit a roadblock after receiving a notice from the Canadian government informing the company the deal is now subject of a national security review. The Australian miner entered in June into an agreement with fission uranium to acquire it for $1.14 billion Canadian or $846 million US, as strong prices for the fuel used in nuclear reactors has lit fire under market consolidations and deals. Let's continue. New Mexican president avoids open pit ban. This is by Colin McClelland at the Northern Miner. Mexico's President Claudia Sheinbaum, who started this month after winning an election in June to succeed Andrés Manuel López Obrador, so far hasn't declared she'll act on her predecessor's wish to ban open-pit mining. Mining wasn't mentioned at all, at least directly, in Sheinbaum's October 1st list of 100 pledges for her government to accomplish. The new president has cited her predecessor as a mentor, but she has too many other issues to handle without confronting mining companies, S&P Global Markets said on Monday. So, very interesting development there. You can read the whole story on northernminer.com. Another headline, Burkina Faso plans to withdraw some mining permits, junta leader says. This is Reuters via mining.com. Ibrahim Traoré, the junta leader, said, quote, "We know how to mine our gold, and I don't understand why we're going to let multinationals come in and mine it." End quote, he said in a radio address to mark 2 years since he seized power in a coup. He continued, quote, "In fact, we're going to withdraw mining permits," end quote. He did not specify which permits or provide further details. Then we got a headline from Reuters about Fortuna Mining, who we just had on the program a few weeks ago, Jorge Ganoza. And the headline here is, Fortuna Mining says Burkina Faso will not withdraw existing mining permits. This came out on October 7th, just yesterday. Fortuna Mining said on Monday that the government of Burkina Faso does not plan to withdraw the Canadian company's existing mining permits in the country. Junta leader Ibrahim Traoré said on Saturday that Burkina Faso planned to withdraw mining permits from some foreign companies and would seek to produce more of its own gold without specifying which permits would be cancelled. So we just saw this in Mali with Barrick, right, who had to renegotiate. Remember the 4 employees who were arrested. Now we're seeing here in Burkina Faso next door a similar sentiment, and it's, again, here we are at gold, $2,660. So perhaps not an accident. So interesting development there. Another development in West Africa, global atomic shares rise on progress update for Dassa uranium mine in Niger. This is Blair McBride at the Northern Miner. And it says here global atomic shares gained 10.5% Friday after the company said 10,000 tons of development ore has been brought to the surface at its Dassa mine in west-central Niger, a contrast with the more difficult experiences of other uranium players in the military-ruled country. Here's Stephen Roman, Global Atomic President and CEO, who said in a news release, quote, "We continue to make excellent progress at the DASA project site as we complete site preparations for civil works to begin and installation of the acid plant as the first major component of the DASA processing plant. A committee with representatives from several key government ministries is being formed to expedite the resolution of any outstanding issues that may arise related to mining, finance, transportation, and labor within Niger." End quote. And finally, just a few more headlines here. So much going on in this incredible sector. Serbia's parliament debates ban on lithium mining. This is Reuters via mining.com. So Rio Tinto and their Yadar project now could effectively be banned, according to this article by Reuters. And last line of the article here, environmental groups warned they would stage more protests if Parliament blocked the opposition proposal. So it is the opposition that is proposing that. Another headline, Apache Tribe takes fight against Resolution Copper to U.S. Supreme Court. This is by a staff writer at mining.com. And final headline, Lucara is selling off its Clara Diamond sales platform, and it's selling it to a group led by HRA Group of companies that is founded by Ira Thomas, the former CEO of Lucara. So pretty interesting development there. And final headline, Costco adds platinum bars to precious metals offering. And, they're selling a huge amount of gold right now at Costco. Now they're adding platinum bars because the business is so good. Those are your news stories. Now let's take a look at metal prices. Turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.01%. That is 0.26% higher than last week, so continuing to rise despite the cut in interest rates. Interestingly, the UK 10-year gilt is yielding 4.2%. That is 0.25% higher. So almost the same amount there, and the Italy 10-year bond is yielding 3.58%. That is 0.2% higher than last week. Turning to precious metals, gold is trading at $2,656.70 per ounce. That is $14 lower than last week. Silver is also slightly lower at $31.36 per ounce. That is 26 cents lower than last week. Platinum is trading at $976.70 per ounce. That is 40 cents lower than last week. And palladium is trading at $1,020 even. That is $28 higher than last week. So gold, silver, and platinum lower, palladium slightly higher. Turning to industrial metals, copper is trading at $4.51 per pound. That is 2 cents higher than last week. Iron ore is trading at $108.84 per metric ton. That is $16 higher than last week. So big jump there. Aluminum is trading at $1.20 per pound. That is 2 cents higher than last week. Lead is trading at 98 cents per pound. That is also 2 cents higher than last week. Nickel is trading at $8.15 per pound. That is 20 cents higher than last week. And continuing a rally that started 5 weeks ago at $7.21. Interestingly, continuing on, tin is trading at $15.33 per pound. That is 40 cents higher than last week. Cobalt is unchanged at $11.02 per pound. Lithium is a penny lower at $10.76 per kilogram. That is a penny lower than last week. Uranium is slightly higher at $82.50 per pound. That is 50 cents higher than last week. And zinc is higher at $1.44 per pound. That is 4 cents higher than last week. I mean, the most remarkable part of this week for me is how little has changed across the board, with the exceptions being palladium, iron ore, and nickel. Interestingly, other than that, we're seeing very slight moves in the rest of the metals, like 2 cents here, less than 1%, it feels like, across the board. Lithium down a penny, uranium up 50 cents. Zinc also doing well, I should say, But lead, 2-cent difference. Copper, 2-cent difference. Hardly any movement. So metals drifting sideways, and those are your metal prices. Coming up, I'm very pleased to welcome back to the show Jeffrey Christian, managing partner at CPM Group. It is always a delight and an honor for Jeffrey Christian to come on the show. He's very generous with his time, and we had a very interesting discussion on the main factors that are driving the gold price. I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner Podcast, Jeffrey Christian, managing partner at CPM Group. Jeff, welcome to the show.
Adrian, it's always a pleasure to speak with you. We always have a lot of territory to cover in a short period of time.
We sure do. As you're saying those words, I was thinking of that awesome Russia episode that we did where it was like, where is the gold in Russia? I think is where we got to. And you had some big story there. That was a classic for sure. It's almost like, Jeff, we need to do a couple of shows, down memory lane or something. As I do this podcast, I'm kind of more and more interested in cataloging the history of individuals, so to speak, in this sector. But zooming out a bit, here we are, October 7th. And as we are staring down this U.S. election in 4 weeks, we have increasing conflict in the Middle East between Israel and Iran and Lebanon. So, you've mentioned before that uncertainty is one of the driving aspects of the precious metals market, particularly gold. Has that been priced in to the gold price at this point, hovering as it is at record levels?
Yeah, I think if I say it's not uncertainty, but uncertainties, that's key to understanding my answer to your question. Uncertainties continually arise and disappear. And the collective uncertainty that the market and the world and investors, mining companies, and everybody else face are constantly changing. I would say that right now, today, the uncertainties that we have identified and lived with over the last 12, 24 months are pretty much fully priced into the markets, everything from gold to copper onward. But the uncertainties are continually changing. And right now, you're talking to me less than a month before a landmark U.S. election. You're talking to me on the anniversary of the Hamas terrorist attack on Israel and the beginning of the Israeli attack on Hamas in Gaza. Right now, the list of potential new uncertainties is increasing, and they're both positive for metals prices and negative for metals prices. So while I think that what we've been afraid of and concerned about is fully priced into the prices of different markets, and gold and silver are quite different from industrial metals. While I think that those things that we have been worried about and concerned about are fully priced into the market, over the next 1 to 2 to 6 months, there could be a range of new uncertainties that could open up and change everything and lead to significant changes in levels and directions of prices, depending on which uncertainties actually come to pass, if that's not too vague.
It is abstract, but I can make sense of it. And it sounds right to me. So to clarify then, what you're telling me is there may be more uncertainties to come.
Yeah, let's take a couple examples. Okay, and I'll try to be brief. The Russian invasion of Ukraine. 3 years on, it's kind of a stalemate. Ukraine has turned the page on Russia and has attacked and seized land within Russia. It's now launching attacks into the interior of Russia against various military sites. It would like to change that and accelerate that. The U.S. government has been holding them back. That could change after the election, right? And it could change in several ways. The war could worsen, but Ukraine could actually pound Russia back to the point where Russia sues for peace. Yeah. And related to the uncertainties of that war, uncertainties of future leadership within Russia. Putin's been in charge now for 24 years, a quarter of a century. He has a lot of people in Russia, oligarchs and very wealthy and powerful people within his government and within the economy who are extremely dissatisfied with the economic and social and political pains that he has brought to the Russian society. He could be gone at some point. And if you think about it, World War I led to the fall of the Tsar. The Afghan War led to the fall of the Soviet government. Regime change in Russia often occurs after a failed military effect. So that's just one. Another one is obviously the Middle East. There are all sorts of ways that could go after the election. I mean, clearly Iran is trying to provoke Israel now before the election. Israel's sitting there really wanting to bomb strategic sites within Iran. Israel's trying to hold off until after the US election. Iran's trying to provoke a response before the US election. So the next 30 days are going to be very treacherous from that perspective. After the US election, you could have a policy shift in the United States. You also have, I think Macron was saying it on Friday, that France is not supplying offensive weapons to Israel, and the rest of the West ought to do the same. So you could have a major shift in the international political structure of the relationships between Israel and Western Europe and the United States. It's all going to be in flux before and after. And then you have, I think you mentioned the economy. I've always said that I don't believe that soft landings occur. Soft landings are simply a prolongation of a mature period of low growth in the late stages of an economic expansion, led by ultimately giving way to a new recession. We've been going through what looks like, and people have labeled a soft landing. We're starting to see increased economic activity. Now, if you look at recessions and how recessions start, sometimes we slide into them from a soft landing, but more often we probably go from a period of higher economic activity, GDP not at 3%, but at 5% or 6%, higher pressures on inflation and interest rates. So I think that the next 6 months are going to be critical in terms of economic trends, not only in the United States and Canada, but also in Europe, Russia, China. China has recently taken some new steps to try to reactivate its economy. Its economy, in turn, has suffered in part by the increased militancy of the Chinese government. There are pressures within the Chinese Communist Party to reduce that militancy and the international negative economic and political consequences that have arisen from that increased militancy. So there's a lot of things that could change. Some of them would be positive for gold prices. Some of them would be negative for gold prices because those uncertainties could lead to a reduction of international tension or a reduction of economic and financial market concerns.
So, in a sense, from a portfolio management point of view, and I know you're not giving financial advice, but it's almost like a status quo. It could kind of fall either way, right? And so, basically you keep a certain allocation in your portfolio and you let it do what gold does.
To use a military analogy, we're in the trenches and we don't dare stick our heads out to look and see what's coming across the field. This thing could go, each of these things could go one or the other way, and they don't necessarily all go in the same direction. So you could have a really interesting broken field. We have in our model a list of, I don't know, 30 some odd economic, political, and financial issues that we follow that are important to the overall markets. And some of them could be moving in a way that's positive for higher gold prices, and some of them could be moving in a way that's negative for gold prices over the next 3 to 6 months. And beyond that, we're more bullish on gold. But I think that over the next 6 months, you're going to see a heightened state of uncertainty because the uncertainties are changing.
Okay, excellent. So another piece of this, giant puzzle really that we're looking at here is interest rates. And we've seen the Federal Reserve, change directions here after what seems like 2 years of raising interest rates, now lowering. You've mentioned in the past that another massive factor behind the gold price are real interest rates. So then, very briefly here, make it make sense for us then as far as how you see the direction of interest rates impacting the gold price right now. Or is it too short of a period or too uncertain, as you say?
Well, I think that the decline in interest rates that we saw, 50 basis points already, will be followed by further declines. I don't know how low interest rates are going to go. I'm not one of those guys who waves my arms in the air and says, oh, we're going back to zero interest rate policies. I think that nominal interest rates probably stay in the 3.5 to 4% range. So that's sort of the target. That will be somewhat positive for gold for a few reasons. First off, it lowers the opportunity cost of owning and holding gold because, with let's say 3% inflation and 4% interest rates, you're getting a real interest rate return of 1%. That's not enough to cause investors to say, oh, I don't need gold. I can earn a 1% real return on 5-year or 10-year treasuries. That's not going to happen. So that's positive for gold, that reduction. In addition to that, the reduction should help the overall economy, and it definitely will help the U.S. equity markets. And when equity markets and bond markets are rising, and when overall economic activity is healthy, investors are wealthier than they were the day before, and they're one day more nervous. The stock market's at record levels. And if you're going to see lower interest rates and a stronger economy, you're going to see even higher stock market levels. And people who have their wealth in stocks and corporate bonds are sitting there saying, I'm at risk here. These things are extremely high. I see the guys on the internet talking about a 50% decline in the stock market. I see more rational economists talking about the potential for a 20 or 25% decline before it recovers. So maybe I should be doing something to diversify my portfolio to protect against the fact that I've got a lot of my wealth tied up in historically high, record high equity markets. That's good for gold too. So I think that the lower interest rates overall are good for gold. I don't think that we're going back to the zero interest rate policies that were in place from 2009 to 2020. I do not think that we're going to the pre-2009 era. I think we're going into uncharted territories vis-a-vis what interest rate policies and levels will be. And that again increases the uncertainty, which causes people to say, I think I should have more of my wealth in gold and silver.
Now, last time you were on in late June, you were mentioning how physical gold demand had the biggest impact on the price at that time. What are you seeing now with all of the excitement? Has that balanced out a bit with more people, buying into ETFs as part of their stock portfolio, so to speak? What are you seeing on the physical side? Is it still driving the market?
Yeah, the physical investment demand, which includes ETFs, because the ETFs, we have 20 some odd ETFs that we trace, and those buy physical gold. So those ETFs are a form of physical demand. There are other ETFs that don't buy physical gold, but they track the price, using futures or options or whatever. We have continued to see strong investment demand really on a global basis. And it's pretty much around the world. The US retail investors and the US institutional investors have lagged the rest of the world, but we've seen pretty strong demand in the Middle East, Asia, South Asia, Europe, Japan, and to some extent also in North America. So we're seeing a lot of investors saying yes. Now, since April or May, That's changed, and we've started to see more U.S. investors coming into the market on top of all those other people. If you look at the gold price in March, at the beginning of March, was about $2,050. And it rose from there to 2,400 by the end of April. And, now it's like 2,660 or so today. So that increase in the gold price since March reflects increased investor demand for gold. That in turn has caused the gold price to rise to levels where we have seen over the last 3 or 4 months central banks pull back. If you go back to late last year, central banks were buying on a net basis, 800,000 to 1 million ounces a month. And over the last 4 months, they've probably averaged closer to about 1 million ounces. So central banks have pulled back partly in response to the higher price. But that's okay in terms of the price outlook because those investors who have increased their demand, in essence, outbidding the central banks.
So we have seen a decline or at least a tempering of central bank buying. And so do you expect that to continue? I mean, you've mentioned in the past that they like to buy low, sell high, or at least buy low. Do you expect the tempered central bank buying to continue in this fashion because of high gold prices?
Yeah, we're looking at gold prices continuing to rise over the next 6 months or so. And we would expect central banks to hold back some from buying as much gold. Beyond April of next year, we could see the gold price come off. And if it does, that would, in our view, likely trigger increased central bank gold purchases once again. But longer term, there are a lot of central banks that want to add gold to their portfolio. They don't want to buy at record high levels, but they want to buy. So from a longer term perspective, we see central banks continuing to be interested in adding gold to their reserves. But from a short term perspective, we think that to some extent, as I said, private investors have been outbidding central banks over the last few months. Now, if you look at a longer term relationship between central bank buying and gold prices, central banks tend to, when the economy improves and investors back off from buying so much gold and the gold price comes down as a result of less investment demand for gold, central banks step in and buy. You saw this in 2013, 14, and then you saw it again in 2017, 18, 19. When the gold price came off, central banks, investors pulled back from buying gold. That caused the gold price to come off. The lower gold price caused central banks to pick up the slack, if you will, and buy more gold. In late 2019 and 2020, 2021, you saw the gold price start to rise as investors were coming back into the market, and central banks pulled back in 2020 from buying so much gold. Plus, they were kind of preoccupied with the lockdown.
Very interesting. It's almost like a cycle into itself, it seems like. I mean, is that true? Just very
Yeah,
briefly, as we
it's very much a cycle.
super interesting. So, as we start to wrap up here, then, Jeff, I do want to get your opinion on a couple other things here. So, I know you don't talk about individual companies or miners, but you
Yeah.
do talk about miners as an asset class. Where are you seeing them? Like, is there a bit of a delayed response? Are they performing well in relation to the gold price as you would expect? Like, how are you seeing the gold shares?
We think that the gold shares, they've been underperforming the physical metal, and they've been underperforming the physical metal for a variety of reasons, many of which have to do with changes in the equity market. You've seen investors shift away from buying individual mining stocks and instead buying indexed funds and indexed ETFs. And those funds and ETFs tend to only include the larger market cap companies. So a lot of the smaller cap companies haven't had that pull. And that's a problem that transcends mining. It has to do with capital formation for smaller companies and sort of like a breakdown in the relationship between equity markets and capital formation. That's going to continue to be an issue. In addition to that, you have a lot of investors who say, mining shares have underperformed bullion So why would I buy mining shares? I will buy bullion. And I think that those things will keep the mining shares weak relative to bullion prices. So there's a paternoster in the mining industry that the mining shares will catch up. They always catch up to the underlying bullion. I don't know that that happens this time.
Wow. It has not been easy to be a gold mining share investor. So that is also interesting. So, as far as other metals here, there's so much I want to fit into this interview. I'm curious about silver. You've also mentioned an interest in nickel, which I thought was kind of contrarian on a recent interview you did. And I'm also curious about lithium, if that market has bottomed in your view. Do you have any kind of quick takes on these three metals?
Sure. Silver, like gold, we think the price rises for at least the next 6 months. Actually, we're a little bit longer term bullish on silver. We wouldn't be surprised to see the price rise into early 2027. Again, it's mostly investment demand that's driving that. We have a market commentary that we hope to release this week called, the real reasons to own and buy silver now, and it focuses on what we expect to be increased investment demand for silver, with some attention paid to rising fabrication demand, which is probably overhyped, and falling mine production, which is probably overhyped as well. So we think silver prices will rise over the next year or two. And when they do come down, they don't come down back to where they were before. So we think that's good. In terms of nickel, we like nickel partly because of the electric vehicle and energy storage system battery industries, which will need more nickel for their lithium ion batteries, which, the formulas keep changing, but nickel seems to be a constant in them, as well as nickel demand in the much larger and much more important steel market. We think that steel industry demand for nickel for use in stainless steel will help drive demand, fundamental demand, physical demand from consumers over the next several years, be it, interrupted by a recession. Lithium, the two big negatives for lithium are that SQM and other brine producers in southern South America can increase their lithium production sharply and quickly, as SQM has done over the last couple of years. And they can be very low cost producers, in addition to which, insofar as you do have an increased use of lithium ion batteries in electric vehicles and electricity storage systems, as those things end their useful life, which is 5 to 10 years, some people say 5, some people say 10. People who drive electric vehicles say 5. People who sell electric vehicles say 10. The volume of lithium ion batteries that will be coming out of the market and will face the potential for recycling is going to be enormous. And the lithium industry has got to face up to the reality that there's going to be a lot of recycled lithium that the electric vehicle manufacturers are going to have to learn to love and live with. So you put SQM and the southern South American brine producers together with increased supply from spent lithium ion batteries, and you have a very well supplied lithium market at a time when people are radically scaling back their expectations for the growth of electric vehicles. We've been in the minority as being more cautious, and we say, yeah, by 2050, maybe a third of the vehicles being produced will be electric vehicles, another 10% being hybrid. Other people were saying, no, we'll have half of the vehicle market electric vehicles by 2030 and 100% by 2035. They're saying, okay, that's a totally unrealistic expectation. So the demand curve for lithium has shifted sharply lower in terms of long-term projections, while the supply is likely to be stronger than people thought. So we're not particularly bullish on lithium, hard rock lithium mining investments.
And final question, are there any other metals on your radar? I know you pay attention to many.
We look at a lot of them: molybdenum, high purity manganese, which gets used in electric vehicles, tantalum, niobium, hafnium. We'll look at any market that's really esoteric. and doesn't have a lot of information. What we like, and it comes from our times in the precious metals, the precious metals markets are incredibly opaque and wildly asymmetrical information flows. So you have a lot of really bad information in gold, silver, platinum group metals markets, and a paucity of good information, which is predominantly accessed by a limited number of participants. So a lot of people are flying in the dark. That's the kind of market that we like. In the 1970s, Jay Aaron decided to create our research group because there was a paucity of information on gold and silver. We added platinum, then we added specialty metals. We like those markets where there isn't an industry association saying, here's the supply and demand numbers. And these specialty metals are exactly that. So we like working in those markets because we can develop a asymmetrical knowledge flow with our knowledge of how to develop supply and demand fundamental estimates. And then we also use our financial engineering to come up with novel ways to finance production and negotiate offtake agreements that have pricing built in using synthetic optionality.
Amazing. Well, I'm looking forward to hearing more about hafnium in the future. Thank you once again, Jeffrey Christian, Managing Partner at CPM Group. Thank you for joining us and sharing your insights on this week's Northern Miner podcast. Thank you once again to Jeffrey Christian, Managing Partner of CPM Group, for joining us on this week's episode of the Northern Miner Podcast. And thank you, dear listener, for joining us and continuing to support this program. And I really appreciate the comments on YouTube and the website that we received. So thank you for that. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends. And until next week, take care.